The European Central Bank and the Bank of England will say later what they're planning to do about the jump in inflation. Prices are rising at their fastest pace in over a decade. In the US, the Federal Reserve has already announced steps to tackle this issue. Our business editor, Stephen Carroll, is with me here in the studio for more. Stephen, first of all, what did America's central bank announce?
The Federal Reserve is going to be reducing its pandemic-era stimulus at a much faster rate than had been previously planned. It's cutting back its bond-buying program that it's been using to prop up the US economy over the past almost 2 years. That's going to be phased out now by the end of March. On top of that, the Fed is expecting to raise interest rates 3 times in 2022 and potentially another three times in 2023. This is a major pivot by the central bank. It's taking a much more aggressive approach to tackling those price rises. That's because inflation in the United States hit 6.8% in November. That's the highest in almost 40 years. Fed Chairman Jerome Powell acknowledging that supply and demand problems linked to the pandemic were causing price rises to last for longer than they had expected.
And that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials, like food, housing, and transportation. We are committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. We will be watching carefully to see whether the economy is evolving in line with expectations.
Now, Stephen, are the Bank of England and the ECB likely to take similar steps today?
The situation is slightly different in Europe. The economic recovery isn't as advanced here as it is in the United States. However, inflation is still a big challenge here. That's for some of the same reasons as the United States, things like higher fuel costs and supply chain problems. The latest figures, these were all published yesterday, show that prices are rising sharply. In the UK, inflation is at its highest level in a decade. In Spain, the November figure was the highest in 29 years. The dilemma facing both central banks now is how to address rising prices but not upset the economic recovery that's underway. That's an even more difficult balancing act now that we have the Omicron variant to think about as well. For central banks, the goal here is to have a little inflation, but not too much. The goal that they have is around 2% inflation, so we are far beyond that, but they do want to think about that from a long-term picture too. So the question is whether or not this spike in inflation is temporary or not. In the UK, we'll be expecting to hear from the Bank of England about the possibility of interest rate rises, while for the European Central Bank, we'll be listening out to hear what Christine Lagarde is going to do with the bond-buying stimulus programme for the Eurozone.
OK, our business editor, Stephen Carroll, thank you very much.